Welcome to Taxed and Confused, the podcast where tax administration meets real talk. We are your hosts, Lizzie and Lisa, two tax nerds on a mission to decode the rules, demystify the system, and maybe even make you laugh along the way. From tax returns to objections and everything in between, we're diving into the world where the burden of proof is on you, not the the ATO. That's right, this isn't criminal law. In tax, you're guilty until proven compliant. But just a quick heads up, this podcast is for educational purposes only. It's not tax advice, and it's definitely not a substitute for professional guidance tailored to your situation. So brace for bureaucracy and join us as we explore the weird, the wonky, and the wildly important world of tax admin. Because when it comes to tax, we're all a little taxed and confused. So today, Lisa, we are taking a deep dive into what happens after a taxpayer lodges their tax return. We examine the assessment process here, including what the Commissioner may issue. So are you ready to rock and roll with assessments?
I am, and it does sound a bit of a dry topic, but it's actually quite, it's an interesting one, actually, Lizzie. I think this one, it's not as dry as other ones. People go, assessments, that sounds a bit dry, but it's not. It's the stuff that can easily get you into trouble, if that makes sense to you. And to me, it's the type of thing there where you can accidentally get into trouble with it as well. So I think it's a great topic, I think, to cover. And it's good for anyone, this sort of thing. We're not going to delve into the Tax Admin Act and do different legislation. We're going to talk about how it actually works.
Yeah, that's it. And it's practical for everybody, because a lot of people, including most of those listening in, has probably dealt with assessments coming through. They may have lodged their tax return but may not really appreciate then the next steps and how that differs from just lodging an income tax return as well. So we are focusing largely on income tax in particular here, but obviously there are a variety of lodgement programs around depending on the particular area of tax you're exploring. So they can look a little bit different here. But let's start. What is an assessment?
Well, an assessment is the process of telling the ATO what tax you have to pay. Because remember, we're self-assessing. Every single entity, Lizzie, isn't it? Everyone's, we changed, I don't know, I think it was before I was doing tax, to the self-assessment system, which means that it's quite interesting because every entity tells the ATO or the Commissioner what tax they have to pay. So assessment is just on the 30th, pretty much everyone's on a 30 June year end, no matter what sort of taxpayer you are, unless you've got a substituting accounting period, which you could have, right? Some businesses do that and they're allowed to do that. But, on the 30th of June every year, after that date, at some point in time, you got to tell the Commissioner how much tax, what's your taxable income, and how much tax you got to pay.
Yeah, pretty much. So we lodge the tax return, which enables that to occur. So a tax return is lodged, which triggers the Commissioner to make an assessment. But it's kind of all in one in a sense, because you're lodging that return through the systems that does. It gives you the calculation. You've popped in your income. You've popped in your deductions. That gives you a taxable income figure, and a tax obligation is calculated from that. And depending on if you've had PAYG withholding, so tax withheld through your pay, for example, you might end up in a refund position. You might end up in a payable position, or you may have no tax to pay.
Like a trust, so essentially, like a discretionary trust. It's just telling everyone to do that. So, and it's interesting as well that the assessment, the process, it's not just tax related. There's a lot of disclosures in there as well. So it's important for people to realise that all the disclosures are important as well, because that's where it's an all of government return. Think about it, an SMSF return. They don't call it an income tax return. It's a return because it's reporting a lot of things. So as well, it's not just that. And, you were talking about doing the calculation. The thing is, the ATO will check that or the Commissioner will check that it's, when it processes it, they'll check your numbers are right. They'll actually do the calculation correctly. So in the old days when we had tax pack and, you had to fill it in yourself and you could have made arithmetic errors, the ATO, would fix that. The same if you don't put the right pay-as-you-go installments or the pay-as-you-go withholding in, things like that. They'll fix the calculation for you. as well. If they've got information, that's obvious, they'll do that.
Yeah. But otherwise, they'll, in a sense, accept the figures that have been submitted by the taxpayer as correct and issue a notice of assessment. So the assessment itself is essentially the act of the commissioner accepting and determining the liability. The next thing that happens is that then creates a notice of assessment that is served to the taxpayer. So that notice of assessment is essentially the documentation, the written information that tells you what, as you as a taxpayer, what you owe or what is refunded will be refunded to you. So there's that difference between the act of the assessment itself and then the notice of that assessment.
Yeah, and it's important because assessment, all entities have to do. An actual physical notice of assessment is only us individuals, right? So with non-individual entities, the lodging of the tax return, the assessment and the notice of assessment basically happens at the same time and you don't get that back, right? So it's only the individuals that receive that. And the big difference is, as well, is when you get the notice of assessment, if you're in a payable, it tells you when you have to pay it, right? If you're in a refund position, they'll give you the refund. But with another entity, you lodge, get your notice of assessment, pay on lodgement in effect. Okay, so it's quite interesting that way.
Yeah,
exactly. So if you're lodging in January, which we are in now, and you're a 15 May lodger, if you lodge early, you'll be due to do your payable. I think it's coming in at the moment because I've done a few tax returns. They're probably coming in around about March or April. But of course, that person could delay to lodge in May and then the payable will be due in June. So you can I use the word game the system? You can make the system work for you if you're in a payable and of course you're using tax agent, because otherwise if you're an individual, you're all being due to lodge on the 31 October.
Yeah. So obviously there's that window from the end of the tax year, so to speak, to the lodgement deadline that, if you've got a payable position, you've got that time to both get your compliance requirements in order, ensure you've got the true and correct information in there, and then lodge it. You don't have to immediately lodge. In fact, lodging a tax return very early in the tax season can be more problematic because that automatic data flows where everything can come through may not be ready at that point, so it can lead to you lodging an income tax return that may not be quite right. So when it comes time, or
you've forgotten something, there's something you've forgotten or omitted. I think from memory, the ATO say that even if you lodge on the 1st of July, for example, we won't process till the 7th or the 14th, or they usually give a bit of because it's a bit of a media blast, isn't it, around that time of year to do all those sort of things as well. But that's assessment and notice of assessment, which is quite interesting.
Yeah. And that becomes really important. That timing point, knowing when the notice of assessment is served, is really important for contemplating if there's then problems down the track, because that's essentially a point in time that becomes relevant for further issues being if they crop up through audit activity, for example.
Oh, and the date's really important because if a notice of assessment is issued to you, right? So remember, when you lodge, process, notice of assessment, all in one go, if it's not an individual. For an individual, when you lodge, the time date on the date of that notice of assessment is absolutely critical to a lot of things where they're time bound for things like that. And the other thing that's really interesting as well is if you want a deferral, right? There's been some act of God or something like that, or you've been in hospital, whatever, you want to defer your income tax return lodgement, you can say, I'm going to defer the lodgement of my tax return if I'm an individual. And by doing that, you automatically get a payment deferral because you don't know how much payable it is until your notice of assessment is issued. So there's a lot of ways to understand the system really well. You can make it work in your advantage.
Yeah. And just remember those time limits that can occur,
Yeah,
and they are often based or on a period starting from that notice
yeah,
of assessment as well.
yeah.
So if you don't have, just to make sure we're on the same page, if we don't have any tax liability, if we calculated that our taxable income was below the tax-free threshold, but we've still
Mm-hmm.
lodged an income tax return, is there still an assessment in that instance?
Can I do the standard tax response, Lizzie? You know what I'm going to say? It depends. It depends. And it depends on a lot of things. The ATO's got a really good link. It says, do I need to lodge a return?
Mm,
And that link covers everything that you need, and it's really lovely.
mm,
So as we know as individuals, if you're under the tax-free threshold, you don't pay any tax, right? But say, you're 16, 18, you're 18 years old, and you've had your part-time job and you've only earned, I don't know, pick a number, $10,000 for the year. You're going to say to me, oh, I don't need to lodge a return, do I? But what's happened as they've been earning money? There's this little thing called pay-as-you-go withholding being taken out.
yeah.
So you look, okay, you've earned $10,000, but let's pick a number for argument's sake, $500 of withholding's been taken out. You can't get that back unless you lodge your return,
Yeah.
right? And that's interesting. The other thing is maybe you're a retiree and you've only got account-based pension coming out. Your super fund's totally in pension mode, all non-assessable income. You're getting that in, but you've got a little investment property on the side, right? And that investment property's only earned net 15K for the year or something like that. You still have to lodge a tax return because the ATO don't know whether that investment property has generated, you've Airbnb'd it and you've made 100 grand out of it. Well, you're not really making that sort of money now, or you are under the threshold, right? So there's that.
Yeah.
Or you're getting some sort of other benefit from the government. As I said before, remember there's disclosures that tell all of government when you lodge a tax return. Like in an individual tax return, if you've got a spouse, you've got to put the spouse income in. Why do you need that? It has no bearing on my tax, but it has a bearing on other things, including those things. So even if you're under the tax-free threshold with no withholding, nothing else, sometimes you need to do that so you can get any sort of other government assistance and things like that.
Yeah.
I think I've covered the main ones, but that's where it is. So sometimes you still need to lodge.
Yeah.
If you're a little retiree,
yeah,
exactly. And if you're a little retiree that just gets a bit of franking credits and things like that, you can actually not lodge, but actually ask for the franking credits to get refunded as well through a different mechanism. So there's all these things where, and a lot of times as well, Lizzie, where it's quite interesting. It's usually the junior, can I call them the junior lawyers? So a junior lawyer will come to me, Lisa, I'm about to get admitted. And when I was 16 and 17, I had a tax file number, but I didn't use it, but I've got outstanding tax returns. Because again, is there a problem normally? Well, no. But the ATO don't know that you haven't earned any money. You've got to tell them. So we've got two ways to do that. You either lodge a nil return in that sort of case. Just because, if you're getting admitted, you can't have any outstanding tax liabilities. That's the issue with it all. So if you're, 16, 17, I got my tax file number, but I didn't get the job at Woolies or whatever. What you do is you can either lodge a return not necessary, or you can lodge a nil return.
And then
there's
that
pros and
triggers
cons
the
for both of
appropriate
those as well, Lizzie.
assessment and completes these assessment cycle in a sense. So what about is there any issues about assessments being valid? So if the commissioner is serving a notice of assessment, is there any concern about the validity of that assessment? It doesn't matter. What if the taxpayer has done something dodgy and there's problems with the submission of the lodgement of their tax return, the information therein? Does that make the assessment invalid, or is it just simply that's part of the process and then it becomes an audit activity?
I would think that it's part of the process. And because we're all digital now, Lizzie, it's very hard to lodge something that's not valid. Right? Like you can get it wrong, but the validity is basically does everything match in terms of your bona fides. Do a KYC or a customer due diligence on yourself. Big issue with people changing their last name, or changing their, not even changing their address would necessarily get picked up, and things like that. So, I mean, that's the way that I look at the validity of a tax return, as saying, if it gets accepted, it's valid. It's not saying it's right. We're just saying that you've met your obligations of you've told us something.
Yeah.
Is that
So
the way
that
that
notice, so that
you
notice
look
of
at it as well?
assessment, so that notice of assessment is essentially evidence that there's been a valid assessment produced. The commissioner has made that assessment. That notice essentially confirms that, and notwithstanding perhaps issues with the tax return that's been lodged, that does not mean that the assessment made by the commissioner will be invalid. You then look to essentially that perhaps triggering an audit activity, or then amend
step.
The ATO then amends it, and then that can trigger further activity.
Absolutely. And the big in-between bit that we've got at the moment, given that there's a lot of scams and cybersecurity and everything like that, please do not click on the link, anyone out there, please, never. It's amazing how clever they're getting now with it all. But I've got clients with compromised tax file numbers. Right. So if you remember the scamming with, what was it, Medibank Private or Optus or whatever, and they took all your driver's license details, you could go and get your driver's license renewed, and changed, and they cut you got your driver's license number at the front, you got your card number on the back, and all that sort of stuff. With tax file numbers, you've got them for life. The ATO say that they will never change your tax file number, but there is a little piece in the Tax Admin Act that says they're allowed to reissue a tax file number, but the ATO say they won't. But we won't argue that semantics on that. But what happens with that, which is quite interesting, is someone trying to scam the system. And I've got a client at the moment that we lodged his tax return. He has a compromised TFN. He's in a refund position. And every week we need more time to assess. We need more time to assess. We need more time to assess. So in effect, he does not have a notice of assessment yet. So this is where it comes into that validity thing, is at the moment it's not valid because the ATO have not checked the bona fides of this client. Now, it's very annoying for him because he's just a kid and he's waiting for $8,000 to get back because he's had pay-as-you-go installments. And so I've called and I said, could you please call them, because it's going to look better coming from you, because you can guarantee by voice, activation and everything, it's the right bank account and the right this and the right that and everything. But this is where it's interesting when you're talking about the validity of assessment. The ATO can hold it if they don't think it's correct. And that has got nothing to do with the numbers. It's got nothing to do with the taxable income. It's all matching name, date of birth, tax file number, bank account.
Yeah, no, I think there'll be a few in that situation where there's the compromised issues, where we've got data breaches, and that's becoming more prevalent and a bigger issue, and perhaps a bit more relevant to the vulnerability framework they're introducing, and the issues that really a lot of taxpayers can face, and the challenges that they can face, that you're looking beyond just the kind of everyday plain vanilla type taxpayer that we tend to examine from a theoretical point of view here.
Absolutely.
So moving on from that basic notion of an assessment, what about a default assessment? What's a default assessment here as opposed to an assessment generally?
Okay, default assessment. Now, I think in your introduction that you so beautifully say every time we do these potties, you say the burden of proof is on us, right? So the default assessment, I think, is the worst thing in the world. Absolutely worst thing in the world that can happen. Because what it is the ATO have said, you haven't lodged. This is what we think your taxable income is. That's a default assessment. You're basically defaulted on lodging on time, and the ATO's had enough, and they've said, we've sent you a few letters. You've got 5 outstanding tax returns, for example. We don't know what that number is. Who knows what it is? It's how they're feeling at the time. We think your taxable income, Lizzie, is $5 million. Prove that it's
God, I'd
not.
love that to be the case. Goodness.
Yeah, prove that it's not, but you've got to prove that it's not.
Yeah.
Right? So that's what the default assessment is. And the default assessment can be for any entity. So the ATO is basically, that's like, I'm fed up, you're disrespecting the tax system. We think this is what your tax return should say. And you must agree, Lizzie, that does not sound very nice at all.
No. So the ATO might be gathering through their data matching information what they perceive to be, and they don't have to be absolutely spot on. It doesn't have to be exact evidence based where you've got invoices and receipts coming in to show taxable income. It can be essentially a reasonable determination by the ATO based on the facts that they have in front of them, and then it's up to the taxpayer to question or prove that the ATO is not correct in that. So the onus of proof.
Exactly, but not only proving that they're wrong, you've got to prove that your right number. That's why it's yucky, absolutely disgusting, right? So you're off on your, we'll pretend you've got your brother's yacht and his Taj Mahal of a house, and you're living, you're drinking Piper High Sick, and you've got a box at the tennis because it's AO time and things like that. The ATO will go, oh, Liz has got a pretty flash lifestyle. I reckon that's what this is the taxable income to meet that lifestyle. And you're going, oh, but my brother's given it all to me. You've got to. You're then going to dob your brother into it, for example. And that's what it is, because it's not just the ATO can pick a number at random that sounds about right. They've got some due process with it all. But then you've got to prove, if you say, no, my taxable income is a lot less than that, well, that's not going to cut it. It's got to be my taxable income is $20,000 because I'm on the SUSO, yeah.
Yeah, and there's been several cases going before the tribunal, time and time again, where the taxpayer simply cannot prove otherwise, that they're not meeting that onus of proof requirement, and so the commissioner's default assessment stands, and it can feel a little bit scary. So it's quite different to a lot of other areas of law here. So the lesson here is that we do need to make sure we're compliant. We do need to be ensuring that we're submitting our tax returns on time, so that we're not in a position where it's imposed on us and we don't have the record keeping in order to correct the commissioner's estimations and determinations. But it can be more so. It's not just if you haven't submitted that tax return. A default assessment can also be issued if you have submitted, but the commissioner has determined it's incomplete, or it just doesn't meet par from their perspective and the data that they've got. So through their audit activities, they've determined it's essentially a mess. So we're going to essentially throw it out and present you a new figure, and it's again up to the taxpayer in that instance to prove the commissioner has not got it right.
Yeah, and that's where we look at the difference between default and amended, right? That's where there's an interesting, tension between those, which comes first, chicken and the egg, and how it all works, right?
Yeah. So,
because a lot of times the ATO can amend an assessment, because we're getting to amendments, I'm sure, as well. But you amend it or they amend it. But normally what you see with defaults, the most common thing I see with defaults is recalcitrant taxpayers that haven't lodged. Okay. Then if the ATO want to start investigating you and they'll look at an amended assessment, after audit activity, then that's more likely to change it that way. So it's usually that way. But of course, you've got to have lodged to have amended in the first place. So it's a bit of a catch-22.
Yeah, that's it. So when we get into the amended assessments, it can be the individual or the taxpayer themselves that voluntarily correct. So they've realised, oh no, I've missed a capital gains event, or I've missed claiming this deduction. So you can go back within a certain time frame and fix that and have it reassessed essentially. The alternative is the ATO, through their audit activities, discover or determine through their data matching and so forth that the taxpayer has missed or has an error and will amend it through there. So they might reject certain deductions. They might include income in as part of the assessable income and then recalculate on that basis. So it's a little bit more specific to the items within the taxable income side of things. things, and you will then get an amended assessment, which means it could be the most likely situation here is you haven't paid enough tax. So you're up for a small tax.
Well, that's on the ATO side. On your side, you've gone off missed a deduction. But remember, I think the important thing to be aware of is you lodge first and get an assessment, and then don't worry, you're allowed to amend. It's not a red flag or anything like that. So normally the ATO will it's a bit like a combination, Lizzie, the way that I think of as a default. I mean, this is not technically correct in terms of the Admin Act, but the way that it actually works, it's a bit of a default amended assessment at the same time. So look at it this way. One of my clients, I said that they were covered for private health insurance, right? There was nothing for me to suggest based on what I could see that they were totally covered for private health insurance. The ATO then did a bit of a campaign and they looked at everyone's private health insurance cover. And they realised, they looked at going, oh, you're only covered for extras. You're not covered for hospital, right? Which is what the rule was. So what ended up happening was you end up getting a letter saying, we've identified that you should have been covered for hospital. Looks like you're only covered for extras. There's an error with it, in effect. Contact us if you think we're wrong. If not, we will amend your assessment at a certain period of time, and it just happens. So that's where it's sort of an amended, but it's sort of a bit of a default because they're just fixing up the data. Again, the ATO will always send you a letter saying, oh, I think you've missed this crypto, or I think you've missed this capital gains tax, or, you've sold your house, or one of those things that they've got the data on. They'll send you a nudge to say, do you want to fix it yourself? So if you agree with them, you don't need to do anything. So that's sort of the amended default very closely guarded. But if you can also amend the assessment yourself to say, no, ATO, you're actually wrong. I will correct it with my data because, yep, you've triggered my thoughts. I'm going to change it. I'm going to change it to my advantage because I am right. You're just guessing with the data that you've got available. I've lived it. So then you amend, right? So there's a number of different ways you can do it.
But there's obviously time limits in which you can amend, or even the ATO can amend in certain circumstances, isn't there? What's the
so it's 2 or 4 years depending on the sophistication, and that's where I highlighted before as well that it's on notice of assessment for an individual. So you go back 2 years, right? Unless you're getting trust distributions and things like that, which is 4, but it's from the issue of the notice of assessment. For that year. It's not from the year or whatever. So if you've lodged 2 years late, they can still order you for another 2 years, if you know what I mean. So it can really, really go ahead. And for businesses and ones that are a bit more sophisticated, which is most of us, apart from the easy vanilla individual returns, you've got 4 years to do it. But there's always unless the ATO think you've got anti-avoidance. Anti-avoidance, so Part 4A, as we call it, right? And general anti-avoidance provision, open forever. Other specific avoidance provisions like Section 100A, which is still flavour of the month, especially with Bendel coming through as well. They're going to be really pushing compliance to Section 100A. They're going, yep, if you've done that, which means that the money hasn't travelled from a trust, in effect, I'll just call it very simply that, but it's more involved. That's opened indefinitely. So there's some quite interesting case law that comes around there where the ATO is trying to get someone, right? Sorry, I shouldn't say it that way. Can I say it that way, Lizzie? I don't know. But the ATO is trying to prosecute someone through the courts, and they've decided to try and prove avoidance because they know they're out of time otherwise. So by the time it goes through the courts, and by looking at case law as well, from the income tax year to when it goes through the courts, it's about 7 years on average. That's sort of that's the time. So you can imagine that, it's going through. You've got to have the time frame to be able to amend it. So sometimes the ATO, you might look at a case, like you and I will read a case and we'll look and go, why did they go after that? And then you look and go, that's why, because they can't amend it otherwise. It's got to be any avoidance. If it's just normal, we go, time's out, bad luck, you snooze, you lose.
Yeah, no, that's really important. So understanding your timing and being compliant, being on time with your compliance work, then is also important for, as you say, like if you're submitting late, then that's taking the clock further and further into the future for things to arise as well and come up. So keeping on moving, let's look at my list of questions here. Um, so what does a taxpayer do if they want to, if they've had an amended assessment or a default assessment come through? Like what can a taxpayer do to consider next steps here?
Well, we're looking at objections and things like that
Mm,
going through the admin process, aren't we, Lizzie? Look, the main thing, and it's the same thing with anything to do with our tax system. Address it early, engage early. If you put your head in the sand and ignore it, it's not going to be pretty. Right.
mm.
And that's definitely for things like director penalty notices and things like that. But the assessments as well, try and be compliant, because the ATO have got a fair bit of wriggle room with what they do and don't do. Okay. So they're basically, if you play nicely, you better to use honey than vinegar sort of thing. If you play nicely and are compliant, it's not saying you're going to not argue your case, but at least be nice, answer things within the time frame and things like that. You can go through objections and things like that with it all, and go through the whole objection system. Then if your objection fails, you can then go through the administrative or the judicial, depending on how deep your pockets are, because remember, the more we go up that triangle, the more costly it's going to be. Not everyone can go to the High Court unless it's a test case.
That's it. And then otherwise, if you run out of options, there's also the Inspector General and Tax Ombudsman that can also assist in if you've got particular complaints or issues that you want to raise.
It's
with
a
your
fairness
experiences
thing.
with the ATO.
Exactly. You'll go to Ruth if there's a fairness thing. But the big thing, Inspector General of Tax, or the Tax Ombudsman, I think she likes calling herself more often now. She's trying to rebrand it a little bit. You've got to explore all your avenues with the ATO. You can't just say, oh, I don't like this, and go running to them. It's got to be, have you explored everything with the tax office first? It's a bit like if I want to put in a complaint on anything, I have to make sure that I've explored everything before I lodge a complaint with anything, administrative errors or something like that I see is happening with the commissioner and his employees.
That's it. And the tax ombudsman obviously can if they support and are in agreement that there is an issue, they can make recommendations to the commissioner. But the commissioner, it's still their decision to then act on it. The tax ombudsman doesn't have the power to formally request the commissioner do any action or change any outcome.
She can encourage. She says that she can encourage, but she can't actually do anything.
It's a good oversight function.
Think of her a bit like a lobbyist on our behalf. I don't think Ruth would probably not like that, but So they've been, look, they're a really good ally to have, especially for us tax agents as well. I really like the services in terms of, and the great thing about what they do as well is they can see if there's any systemic issues. So if they keep getting a complaint about a certain area, they can take it on board, just like they've done with the coercive control and domestic violence, which is now very, very topical at the moment as well.
Yeah. So otherwise, a taxpayer can seek the obviously assistance of tax practitioners. They can utilise if they're in a position where they can't afford support. There's obviously the tax clinic programs around operating across various universities. So there should be, in theory, support for taxpayers to follow up if they have received an amended or default assessment and they don't know what to do. But obviously tax practitioners, they need to be registered with the Tax Practitioners Board to ensure appropriate and essentially what's the word I'm looking for? I've lost my words at the end of this episode.
I don't know. We're still getting back into it. It's the first one back for 2026. And look, it's really important in this day and age, and I think it's just you need to do your own due diligence. Like, even if you get a plumber, you should Google them. If you're using any sort of expert, check that they're registered with a TPB. Check that, you don't just look at Google reviews or Facebook reviews. You can have bots doing that. At least try and, get some, so you've got trust in the advisor. Because I'll go back to it as well. And I had this conversation with a few of my colleagues of late as well. We can assist you, but if you sign that tax return, you're on the hook for it. Okay? Because and that's what's really important with it all. So I think, with anything that you do, ask the right questions.
For sure. And the Tax Practitioners Board does offer a register of registered tax practitioners, so you can actually check and verify that your tax agent is appropriately regulated or within the purview of the regulators as well. So we are looking. Competency is the word I was looking for earlier.
I couldn't work out. Yeah, I couldn't work out what you were getting
trust
at.
And competence.
But you know what's really great now on the TPB register, and we'll put this on the comments on this, Lizzie, which is great, is that most tax agents will work through a business name of some kind, whether it's a company, a trust, or whatever. That entity needs to be registered, as well as having enough individual registered tax agents. And what happens now, it's linked. So if you go to ABC Tax Advisors, you'll be able to see who the registered tax agents that are providing the support to ABC Tax Advisors is. So you'll be able to see that you're talking to a person in this organisation. Oh, is that the tax agent or not? Which I think is really important when some businesses, tax agents, will lodge, 10,000 tax returns. Some will lodge 300 tax returns. It's important that you're getting the right advice as well. So even question that. So you can look at it up and go, oh, Lisa's the registered tax agent. Oh, Lisa's the one that I'm talking to. Oh, good. But if it's, someone else, just question, well, who's doing this? Is this someone, somewhere else?
Yeah. No, that's a really good point and a really good improvement to the information available to tax practitioners.
Now that we've got on yearly renewals. Oh, yeah. Don't talk to me about that. It used to be 3 years, everyone, and now we're on yearly renewals. Yeah.
Yeah, for sure. So is there anything, Lisa, that you'd like to mention as we wrap up this episode before? Is there any last ditch comment around the assessment?
I just want to tell everyone, no matter what entity you are, lodge and lodge on time. Okay? I'm a big believer in doing nil returns. All right? Don't just go, I've got nothing to report, I'm not going to do it, because the ATO don't know that. They are not mind readers. They might think they've got a crystal ball, but they're not mind readers. So I think it's really important for everyone. The best way to stay off the radar of the ATO and the Commissioner of Tax and do everything so you're not going to get a default assessment, because that is the worst thing that can happen to you pretty much, I would think, in terms of lodgement. Lodge and lodge on time.
Very good words to wrap up this episode. So that's it for this episode of Taxed and Confused, where the rules are rigid and the paperwork is endless. I think we've definitely proved that today. And the burden of proof is all yours. If you enjoyed today's deep dive into tax admin, don't forget to subscribe, leave a review, and share it with someone who's just as confused as we are. And remember, this podcast is for education and entertainment purposes only. It's not tax advice, and we're not your tax agents. Thanks for listening, and until next time, stay curious, stay compliant, and stay just a little bit taxed and confused.